How's it going? Welcome. In today's video, we're going to go a little bit over why the market is acting funny. Not haha funny. Actually, very, very scary funny. Biggest pieces that we have to really take into account right now in this moment. We can talk about the war, we can talk about the politics, but those don't naturally affect. I don't know what just happened. Okay, never mind. Something opened up. Anyway, war, all that jazz doesn't matter. Right now, there's a lot of liquidity in the market that has to leave. It has no choice. If you know about the carry trade from the Japanese yen, well, they're trying to go back into positive interest rates. Case scenario, it's an experimental feature of the Japanese interest rate section that essentially will give you money to borrow money. This is opposite from the typical logic. And me trying to explain this to a typical individual that, deals with the normal world of interest. You want $1,000, give me 10 if it's gonna be in the next month. Give me 100 if it's gonna be in the next year. The longer the time, the more you should make from your interest. That's a different point to make on the US 2-year interest and the inversion with the 10. That's already happened, but we'll go into that too. So there's a lot of money that needs to leave because Japan is now switching from its negative interest rate priorities or strategy that didn't really work to a positive. But you have to consider what really did happen during that time. Japanese investors have almost infinite cash at this point. They can borrow as much as they want and they're not going to be paying any interest on it. So you provide a higher yield location. US markets. What's higher yield than a pump on the Nvidia stock, right? This is where I estimate the carry trade zone liquidated. We've tried multiple times to get above this, but what this signals to me, whatever this whole section of money was at one point, does not exist anymore. So yeah, you're gonna want to have another higher high for a bullish market. But how can you have a higher high when there's no money to contribute? All the money's tied in. Real estate, right? Safe investments, low risk backups. That money needs to be liquidated before it gets reused again. So no one's really going to take money out of other markets, especially when United States commercial real estate has been having issues. So has the Chinese. I mean, it's kind of worldwide at this point. A lot of money that's being leveraged is finally being, well, liquidated. A flow of outflows needing to stop the bleed of monthly or yearly losses. And what happens when you liquidate? Well, you got a whole missing section up here. Again, carry trade specifically, nothing to do with real estate. This is just one piece of chaos. And we have plenty to talk about. Car markets, real estate markets, job markets. But I'm not going to go through all the fundamentals. You can check on my Twitter for all the details that happen. I write articles based on these details that will give you more explanation to, wait, what the heck is going on? What is the US2 interest and the US 10-year interest, and what happens when they invert or when they reinvert? A lot of people are lost. These rate cuts, they're not, the go lucky yay happening. Great, now we can reinvest money. There's no more money. These people are running out of money. The interests are too high. They cannot pay them. And now they're begging Powell to lower interest, which we really shouldn't do for a while because we need to squeeze out all the zombie companies from the market that act as middlemen to basically not provide any actual productivity, just squeezing out a few extra bucks from the purchase every single time. This whole economy has middlemen up the A. Insurance, also middlemen. Middlemen that can basically control the price of your product. So medical insurance doesn't really give you a very good hope, especially when, well, it's backed by corporations. So carry trade is acting very strongly. And for the record, this is going to be the biggest zone that you'll see is Nvidia, very overflowed, overbought bubble. That's why you can tell this huge drop here. If you look at the SPY, we're essentially not too far off. We did touch that, but did not make a higher high, which tells me big oopsies. Now, the squeeze of this, I really see how hard it took for them to build this bullish or actually bearish flag, but try to squeeze as much top as you can before you finally drop. So at one point, I did have a liquidity zone of potential carry trade liquidity missing, but they broke through it. So I imagine this section here, well, they took out money from other stocks and tried to really pump it up as much as they can, or other assets, whatever they may be. So what's going on? Well, you're seeing a lot of continuous patterns that are at first accurate. This one's good. Typical breakdown. But then you start seeing weird things like here, where a typical break up would be necessary for a natural exit. This is a bullish flag. As soon as you see technical starting to fall apart, you know something is wrong. Technicals that would naturally flow in a specific direction start going against you. Check the volume. What is happening in that last moment? Well, not in this case, but we've had a lot of negative volume. And now the aftermarket today is going to be chaos. We're going to have to watch for anything specific. But I want to really, really, really focus in on that Japanese USD carry trade. We're set for another drop, guys. We are set for another 10%, 15, depending on if we can hold at a new base for a foundation. But liquidity on the market is tough. Real estate, especially commercial, having troubles. Companies laying off people just to squeeze a little bit of share price. A lot of red flags happening, and this might tip the dominoes on the next stages. Now, we can arguably say we're already in a bear market. We've been in a bear market. We're just kind of having some bullish stampedes from time to time, which is very common. And bullish runs are very strong, very, very strong. Many times the strongest during huge downtrends because of the counter aspect to what your expectations are and the big boys that want to make that money against those expectations, betting against the typical retailer. The definition of dumb money given to us by quote unquote smart money that over leverages and only keeps about 10% of their actual assets backed up as they over leverage the other 90. Dumb money, smart money, that definition is about to switch because smart money has actually been reckless money. They've been spending, leveraging, and under certain circumstances of potential tinfoil hat situations, GME, AMC, you know the names, they could be a part of the problem. There's a lot of signifying factors. There's a large hot potato bag being carried around, broke a couple of banks in the US, and I believe it broke one in Switzerland as well. UBS had to buy it out. Now, no one knows what those assets truly are, but if they're not saying it, what do you think it might be? Real estate, we know. We have the data behind it. We have the data behind every single little detail. We'd catch that particular bag of hot potatoes waiting to explode. But there's no data signifying other than back in 2021, 160% of GME being shorted. Now, I don't think that's been covered. You cannot cover 60% extra of whatever max that exists in the world. You'd have to wait your turn for a while. So, depending on how big your tinfoil cap is, you may consider a lot of much deeper factors that could really set the stage for a generation of wealth redistribution, especially potentially from the heavily risked over leveraged assets and investments to the more small biz, less risk, stable type of investments. Because in the end, the bigger you are, the riskier you get, and the harder you fall, the bigger the hole you leave in the ground. So, considering this is the main focus right now, we are reversing from the last location in which the Japanese yen had a big dip, 10% in the market. Not that it was significantly perfect, because if you consider a few factors here, this is August 5th. August 5th wasn't exactly the starting of our drop down, right? It was a little bit later. But you have to liquidate, get some money out, or potentially plan it. Well, okay, here's what's really happening here. They had to start liquidating something somewhere. Different markets, different times. The strength of the Japanese yen is to worry. That's the problem. The Japanese yen must be calmed down because if the price of your US or monetary system, your individual dollar, whatever symbol it may contain, if it gets stronger, you'd figure, yeah, that's good. But if it gets stronger, your market's going down. If it gets stronger, it takes less dollars to buy your Tesla. So your Tesla in price will actually reduce because of the value of your monetary system increasing. So it's a very, very delicate play of balance. And right now, the US to Japanese yen is not having a good time being, oh, for the lack of a better word, calm. It's very volatile. And each time we've tried to push it down, it's been popping back up. Now we're at the same level that we would expect the next leg down to happen in the market. So be prepared. Get your hedges straight. Know your UVIX, know your SQQQs, know your TLTs. If you need to know more information about how to protect yourself, please come to x.com, TWL Christoph. That's my tag. You can find it all over my profiles, all over the comments, descriptions, whatever the case may be. But it's important. You got to know your next steps. We're going to have a huge issue if we cannot catch ourselves. Can we catch ourselves? Well, let me tell you this. The Biden administration has been lying about the jobs report. Who takes into consideration the jobs report? Everyone that invests and their mothers. Not only that, Jerome Powell, the man that's going to save us with interest rate manipulation, if you will. You give him the wrong data, he's not going to act at the right time. We do not have responsible people in the top levels. They are really playing very risky games with monetary systems. And on top of that, we've got BRICS, Russia, China, basically trying to have a competitive match while we've got a crippling foot. So be careful, know your hedges, be aware. And right now is the best time in the world to start really keeping track of markets. Yes, people say you need to go stop doing this stuff because it's driving you crazy. I don't do it all the time, but I do it at times of need, and this is a time of need. There's a lot of chaos happening, and if you're not aware, you're only going to be doomed in the process. If you want to be safe and not care about this crap, just buy some gold and silver and call it a day. Or if you have real estate, keep it nice, potentially start renting it out. Find your own place on the side, rent out, and start expanding your incomes. You're gonna need it for the next couple of years. Um, can't be 100% sure, but all the signals, including the responsibility of our big boys up top, all of them, whether corporate or government, they are all acting a fool right now. And that is not a safe place to be when you've got money invested in these fools acting like fucking retards. Sorry, it's not politically correct. I think there's more important things to worry about than political correct bullshit. I really do. That's a distraction, you guys. If you're still stuck on this, that, oh, you have a right to this, you have a right. We all have the same fucking rights. Get over it. Doesn't matter who you are, be free. We get it. But you have to realize that you're being pumped this information because if you look around a little bit, you might notice something's going wrong, especially food prices at your grocery store. So stay safe, squeeze those hedges tight, and stay frosty. Till next time.